Good morning and welcome. You're watching Market Cafe on ET Now. I am Harsh Saita and with me is Ankita Saxena. Good morning, Ankita.
Good morning to you, Harsh.
Right, so it's the start of a fresh new week of trade. Me and Ankita are going to take you through all that's happening in global markets as well as what stocks to focus on to start this week off. So Ankita, talk to us about US, Europe. How have they fared?
So Harsh, in the US markets, the Dow inched up but that was primarily on the back of earnings. But S&P and Nasdaq were bucking the trend, and so were the European markets. They ended the day in the red. But the Dow Jones Industrial Average climbed on Friday as strong earnings results from some of the biggest banks and companies kicked off the earnings season. Now, the Dow added 113 points and marked its fifth consecutive day of gains. United Health's share lifted the blue chip index as it was the top performer, jumping more than 7% after it reported better than expected adjusted earnings and revenue. JP Morgan Chase rose 0.6% after its second quarter earnings topped the expectations, and so did Wells Fargo that inched Wells Fargo were inched down 0.3%, even though the bank posted better than expected results. But the S&P 500 dropped 0.1%, and so did Nasdaq Composite that declined 0.1% in trade. Now, both S&P 500 and the Nasdaq touched their highest intraday levels since the April 2022. On a weekly basis, Dow notched its best performance since March, up 2.3%. The S&P 500 added 2.4%, and the Nasdaq gained 3.3% in trade. Let's go across to the European markets. The European stock markets closed lower on Friday after 5 positive sessions. We did see some selling coming in there. The Pan-European Stock 600 closed down 0.1%. FTSE was rather flat but ended the day in the red, down 0.08%, very flat. DAX was down 0.2%, and CAC, however, was bucking the trend, was up very flat but ended the day in the green, was up 0.06%. Remember last week the UK economy had contracted 0.1% in the month of May, though less than the 0.3% on a month-on-month contraction forecast in the Reuters poll. So that's the roundup of what happened on Friday, Harsh.
Right, absolutely. The roundup through Friday, and honestly, even today morning, Ankita, the US, stock futures look absolutely flat. Slight negative bias coming through as well on those. So that's the early indications. We'll of course go to Asian markets sooner. But let's quickly move on to what oil is up to. We have oil prices a bit on the retreat after a very solid week of gains that it clocked last week, 2% plus higher in terms of oil prices. We saw crude WTI at around $75 a barrel, currently Brent just below that $80 a barrel mark, and a couple of pieces, moving parts that are impacting oil. Let's first talk about the biggest moving part, crude, the dollar index rather, my apologies. You're looking at the dollar index, which has fallen quite sharply, Ankita. What we're seeing, in fact, is the dollar index fall below the 100 mark for the first time since March of 2022. So it's been a steep fall for the dollar index. Now, the dollar index works in inverse correlation with crude prices. So as the dollar index falls, you see crude prices shoot up, and that's exactly what's happened. Slightly prematurely, but it's happened nonetheless. Let's also look at the other piece that's at play. We had a couple of disruptions both in Libya as well as Nigeria, accounting for around 500,000 barrels a day. That roughly accounts for 0.5% of the world's production, and that supply constraint is also what's keeping oil slightly more in focus, and that's why you're seeing oil prices higher, other than of course the obvious one, profit booking happening at some of these prices. So look at all of these factors. That's what's really moving oil at the moment.
Right, Harsh. Let's quickly move on and go across to all the events that we need to keep a track of through this week. We have, from the US, we have the retail sale numbers that will be coming out on the 18th of July. On the 19th of July, we have the housing stats. On 20th of July, we have the initial jobless claims, a very important data because we still have a robust labor market in the US, and that's what is, probably encouraging the Fed to increase the rate hikes. So that's an important number that we will be watching out very closely. Also in the UK, on the 19th of July, the CPI data is coming out. On 20th of July, China's loan prime rates will be coming out, and in terms of the global earnings, we have BOA, Morgan Stanley, that will be coming out with their quarter earnings on the 18th of July. And on the 19th of July, we have Goldman Sachs, IBM, Tesla and Netflix that will be reporting their numbers. Also, coming back home, we have a lot of earnings lined up this week. We have HDFC Bank that will be reporting its number as of today, LTI Mindtree. On the 18th of July, we have IndusInd Bank. 20th July, we have Infosys. We have HUL, and on the 21st of July, we have HDFC Life, Ultratech Cement and JSW Steel that will be reporting its quarter numbers. So an action-packed week there, Harsh, for us.
Well, yes, but let's start the week off with some very interesting action that's happened yesterday, which is Sunday. We did see the Wimbledon final come through, and we saw, Alcaraz as well as Djokovic play an outstanding Wimbledon final. In fact, what we saw was the second longest final in Wimbledon history. Let's begin with that. 20-year-old Carlos Alcaraz, top seeded, ends Novak Djokovic's 34 match winning streak at the Wimbledon final. Alcaraz claims his first championship at the All England club and second Grand Slam trophy ever. Do remember, Alcaraz prevented Djokovic from what would have been a record-tying 8th title and 5th in a row. Djokovic also was kept from claiming his 24th career major.
And moving on then, the UK government has officially signed the treaty to join a major Indo-Pacific bloc. Britain hailed what is said was its biggest trade deal since Brexit. UK's Business and Trade Secretary signed the accession protocol for the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. This makes UK the first new member and the first European nation to join the bloc since the creation in 2018.
Let's quickly switch to corporate. Twitter owner Elon Musk said that the company still has a negative cash flow because of its heavy debt load, and as much as a 50% drop in advertising revenues also seen. Separately, the billionaire has also announced that the platform will be increasing the number of tweets of verified tweet accounts I'm going to go back to that. The number of tweets verified accounts can see each day by 50% following complaints from users.
And JP Morgan Chase beat Wall Street estimates for the second quarter with record profits, even as its chief Jamie Dimon cautioned about unprecedented economic risks. The largest US lender's profits climbed as it earned more from borrowers' interest payments and benefited from the purchase of the First Republic Bank. Meanwhile, Citigroup posts Q2 revenues that topped expectations as well. Citi said that the macro uncertainty and low volatility impacted the client activity and performance.
Right, and Washington-based software giant Microsoft signs a 10-year binding agreement to keep the Call of Duty franchise on the Sony PlayStation platform following the planned acquisition of Activision Blizzard. Do remember, the announcement is of significance because Sony has resisted the agreement for the longest time, marking the biggest roadblock to the $69 billion deal.
And India's G20 presidency has seen successful talks so far. The third G20 finance ministers and central bank governors meeting is scheduled for today and tomorrow in Gandhinagar, Gujarat. And the meeting will be co-chaired by Finance Minister Nirmala Sitharaman and RBI Governor Shaktikanta Das. A total of 520 participants are representing 66 delegations. My colleague Ankur Mishra, who is at the location, is joining us to tell us what to expect.
All-important meeting of finance minister and central bank governors will begin very shortly, and this is happening after the deputies has met over Friday as well as Saturday. We also understand that there were several bilateral talks which happened with Indonesia. As far as the key deliverables of this two-day meeting, which is beginning from today, is concerned, one of them is definitely the multi-development banks, how that can be progressed. Apart from that, the digital public infrastructure will also be discussed during these 2 days meetings, and also crypto assets guidance note is something to be watched out for, because there has been lot of talks and deliberations upon crypto assets, how a common framework can be there, coordinated with all the countries. Now that is something, that effort is taken under India's presidency, and it needs to be watched out. What is the outcome? Can India conclude on something by this, or pass on to the next presidency? That is something which needs to be watched out. But for sure, the treatment of debt of nations which are under common framework is also considered in the meeting which is going to be held for 2 days. So all these things are on the agenda. It will be action-packed day from here at Gandhinagar.
Right, action-packed day, and we'll get you all of that action, of course, through Ankur. But over the weekend, US Treasury Secretary attended the G20 finance track meet, where she once again touted strong relations between the US and India. While calling for better tax reforms and a stronger financial system, Janet Yellen said nations need to come together to work on debt stress in emerging markets. Added that the US sees India as a significant partner in friendshoring.
So friendshoring is an important foundation of our approach to increasing the resilience of our supply chains, and we see India as an indispensable partner in that, and more broadly. I hope to use this trip to deepen what is already a very significant relationship with respect to friendshoring that the United States and India have. Our ties continue to deepen. The United States is India's largest export market. Our bilateral trade last year reached an all-time high, and we are looking to see it grow even more. Friendshoring will also be a significant area for discussion in the next portion of our trip in Vietnam. So I aim to strengthen our bilateral economic ties, and behavior by the private sector is really an important part of friendshoring, and we are seeing continued announcements of investments in India by private firms that see India as an excellent place to be producing and exporting to the United States.
Well, back home, Finance Minister Nirmala Sitharaman shed some clarity on government's view on crypto assets. Also stressed on the need for a robust financial institutions, calling for more private investments to develop urban infrastructure. Listen in to what she had to say.
To complement the pool of funds available for infrastructure, in addition to public investment and finance provided by MDBs, we need alternate solutions to leverage private sector participation. In this context, innovative financing instruments such as blended finance, structured project finance, securitization, thematic bonds, biodiversity offerings, payments for ecosystem services, and local currency finance, some of the need to be explored based on country-specific circumstances. By embracing these innovative strategies, we can build and bridge the financing gap, foster sustainable development, and propel the growth of infrastructure in cities.
Right, that was of course the Finance Minister Nirmala Sitharaman, but let's quickly get into a short break. More on the other side. We'll go to the impaired segment, of course, following a check on the Asian markets. Right, welcome back. You're watching Market Cafe on ET. Now we'll go straight to what Asian markets are up to. While you can see the dollar index gaining just a wee bit after falling below that 100 mark, you can see Shanghai, which is down around 1% or so, taking largely from the cues that the US markets have set forth for the Asian indices. You're also seeing the Nikkei, which is down just about 0.1%, absolutely flat there. Slight negative bias coming in. We're also seeing the Kospi, which is down by a similar margin, around 0.1% lower, and we're also seeing the Hang Seng, which is up 0.33%, but the ASX 200 is what I really want to switch to. Again, absolutely flat, down around 0.1%. So a slight negative bias coming through across the Asian basket, except for the Chinese indices, of course. And that's really what's spilling over onto our own GIFT Nifty as well. You can see a slight positive bias rather on the other side of the negatives that we can see on the global front, but a very small positive bias, so really not much of meaning in that positive bias.
Right, Harsh. So rather flattish start for the Indian markets as well, because even the US futures are pretty flat, though in the red. Let's quickly move on and take you through the stellar lineup that we have on the market. At 9:20 a.m., we have Saurav Mukherjee of Marcellus Investment Managers on how to spot a multi-bagger. At 9:35, we have Pankaj Murarka of Renaissance Investment Managers on growth making a comeback. At 9:40, we have Chandrasekhar Ghosh of Bandhan Bank on the Q1 earnings for the bank. At 9:50, we have Amit Agarwal of Raymond on the Q1 earnings and the growth roadmap ahead. At 10:20 a.m., we have Renu Baid of IIFL Institutional Equities on the earnings.
Right, thanks so much for that, Ankita. Let's quickly move on. Two big wigs are going to disclose their earnings today. You have LTI Mindtree, again now a Nifty company, around 0.5% weightage on the Nifty. But the other one is going to be HDFC Bank, which is going to disclose its Q1 numbers. Of course, standalone numbers flashing on your screens. That's the expectation. Around 24,000 crore is where the NII is expected to be at, around a 23% growth on a year-on-year basis. You're expecting operating profit, though, slightly lower, 18,500. That's just about a 20% growth, absolutely flat on a sequential basis, but a 20% growth on a year-on-year basis. Nonetheless, of course, the higher OPEX, 1,500 odd branches that HDFC Bank is going to be adding, the people along with that, and of course, all that's happening on the merger, that can be understandable. Let's quickly move on to what the provisions are expected to be at. Around the 4,000 crore mark is where the provisions number is expected to be at, and therefore PAT is expected to be around 8.5% lower sequentially, around 20% growth on a year-on-year basis. 11,000 crore is where we're expecting that number to come in at. Where the NIM is concerned, that's going to be a critical point of focus. The liability franchise seems to be chugging in very well. You're expecting NIMs of around 4.1% with a slightly lower bias, probably 4.05% is where that NIM number can be expected. In terms of where the NPAs are concerned, you're seeing absolutely flat NPAs across the board is the expectation. The agri book will be in focus where asset quality is concerned. Let's quickly move on to what numbers have already been disclosed. The combined bank has grown at 13% on the asset side, which is the loan side, and just about 16% on the liability side, the deposit side. But standalone, it's not been so bad. It's been a 16% growth on the advances side, around a 20% growth on the deposit side, 19 plus. But broadly, it's been a solid deposit performance from HDFC Bank. Of course, the larger numbers expected today.
That's correct, Harsh, and we'll stay with HDFC because with HDFC and HDFC Bank merger done, what's really the way forward for the bank and what kind of synergies will reflect for the bank? In an exclusive chat with ET Now, Keki Mistry, the man who stayed the housing finance giant, says that the potential for growth is rather phenomenal. Listen in to what he had to say.
The potential for growth is phenomenal. Sure. To my mind, the asset growth opportunities in India are just unbelievably strong. And I'm not talking only mortgages. I'm talking of just about every single financial service product you can imagine. Because the penetration levels of every financial service product in India is lower than most parts of the world. So there is phenomenal growth opportunity. Also, we have a young population. 2/3 of our population is below 35 years. People want to do things. People want to borrow money. People want to buy things. Aspiration levels have really risen over time. So all this creates so much of opportunity for growth. And as far as mortgages are concerned, that I can tell you with complete confidence that the growth is not there for 1 year or 5 years or 10 years. To my mind, it is there for several decades.
But is there something in terms of a roadblock or a teething trouble that you would first try and address
I mean,
for
first
the
we have to
merged
get,
entity?
I would say the first thing is the fact that people have to get sort of, start working together as a team, integration. Fortunately, that was not as much as a challenge in this merger as it could be for other mergers.
Yeah, because your ethos is pretty much the same.
One, ethos is the same, and two is there is no product duplication.
Clash. Yeah.
There is no product clash. We do mortgages, bank does everything else. So for certain functions, yes, corporate functions, there is a clash. But for everything else, there is not a clash. So yes, some time will go in the process of integration, a quarter, 2 quarters before the full synergies of a merger can emerge.
But besides integration, which is an internal thing, externally, the combined unit, is there any roadblock that you sense?
I mean, the biggest requirement to my mind will be funding, because the growth opportunities are huge. Funding today, fortunately, the bank has been very successful. If you look at the last 12 months, they have consistently kept raising their market share in deposits. So fortunately, touch wood, at the moment, that doesn't look as much of a problem as it perhaps could have in early 2022.
Right, that was of course HDFC Bank. Let's quickly move on to LTI Mindtree, also expected to come out with numbers today. You're expecting, the number in terms of the dollar revenue to be up around 0.5% or thereabouts on a sequential basis. You're also expecting rupee revenue up around 1% or thereabouts. You're looking at EBIT margin, which is expected to expand around 40 bips or so. On a sequential basis, expected just below that 17% mark. Now the EBIT margin, PAT is expected to grow a healthy 7% on a sequential basis. So LTI Mindtree in focus. The management has hinted that revenue growth may be soft in Q1, but weakness in the BFSI sector is what is attributed to that. Expected to be in focus. You're expected to see synergies and the merger costs to aid margins, and that margin number therefore will go up by 40 bips or thereabout. We spoke about that. And you're expecting these operational efficiencies to start to kick in. Flattish headcount, that's what's expected. Deal number around $1 billion is what is anticipated. Of course, need to wait and watch how that performance pans out.
That's right, Harsh. And we'll move on then. The government has reimposed the windfall tax on petroleum crude after a gap of 2 months. The tax is hiked to rupees 1,600 per ton from nil. My colleague Prakash Priyadarshi joins in with more details on this.
Yes, as per the Ministry of Finance a new notification, windfall gain taxes on domestic crude production raised from nil after a gap of 2 months, as you rightly said. Government has increased windfall gain taxes on domestic crude production to rupees 1,600 per ton from nil. However, windfall gain taxes on export of petrol, diesel, and ATF remain nil. There are no such changes in export of petrol, diesel, and ATF. The only changes we are witnessing on the domestic crude production, and it has been increased to rupees 1,600 per ton from nil, and the new rates are effective from today. As you are aware that the government had in the month of May reduced to windfall gain taxes to nil on domestic crude production, but after a gap of 2 months, it has been increased. And this revision in windfall gain taxes comes on the back of rising oil prices. Global oil prices in recent days have risen to their highest level in nearly 3 months. And that is happening especially due to OPEC Plus decision to take further production. So taking into consideration, government has decided to increase windfall gain taxes on domestic crude production. But the good thing is that there are no such changes on export of petrol, diesel, and ATF. The windfall gain taxes on these three petroleum products remain nil.
Right. Thanks for that, Prakash. But with that, we'll slip into a very short break. More on the other side. Of course, we're already focusing on stocks, but we'll look at all of the stocks that are in news as well. Right. We did speak about all the numbers expected today, but let's also talk about all the numbers that have come out over Friday as well as the weekend. Avenue Supermarts was one of those candidates. Mixed bag. Prima facie operational profit and margins are below estimates, while revenue seems largely in line. Vinny is here with all of the numbers. Break it down for us, Vinny.
Absolutely. So when you look at Avenue Supermart's numbers, revenue, obviously we have the number coming in because of the Q1 operational update, and that is why it is in line with what the street was expecting as well. But margins, that is one where we are seeing below expectations, further more decline than what we were expecting. Margins have contracted to 8.9% versus 10.3%. So a sharper contraction. We were only expecting a 70 basis point contraction. This is much sharper than that. Profits of the company seeing only a 2% growth, while in terms of the revenues, an 18% growth is what that has come in. Now, mainly what impacted the overall business is the recovery that we see in general merchandise and apparel business. That is a high margin contribution business as well, and that contribution has still been lower. We have not seen a full recovery coming in. Yes, sequentially it's improving. That's what the company has highlighted. But overall, on a year-on-year basis, it's still lower. On a year-on-year basis also, and pre-pandemic levels, it is still nearing those levels, but still below those levels. So that recovery is not complete over there, and that is what has impacted the margins of the company, impacted the sales of the company as well. Let's not forget even the number of stores they've added. They've only added 3 stores during the quarter. So the pace of store openings also has seen a reduction coming in. Now brokerages like Jeffries, they're maintaining a hold on this one. They've hiked the target price to 3,700 rupees per share for Avenue Supermart from previous 3,425 rupees per share. What they believe is that the pressure continues to be slightly there, but the slightly positive commentary is something that is a bit of a relief that we could see coming in for Avenue Supermart. But as of now, nothing exciting in terms of their numbers over there. Morgan Stanley too maintaining an equal rate rating with a target price of 3,786 rupees.
All right, Vinny, thank you so much for that. But stay on, because VST Industries will also be in focus on the back of its Q1 earnings. So what does this mean for ITC with respect to the cigarette volumes going forward? Tell us more on this, Vinny.
First, let me just take you all through the numbers of VST Industries. When you look at it, we've seen a 10% growth in revenue. We've seen EBITDA, that's seen a decline of 6%, profit seeing a decline of 4%, and margins seeing a contraction and coming in at 23.9% versus 28%. Now, volumes, they are down by 7%, but this is year-on-year basis. But sequentially, yes, we're seeing an improvement coming in there. Now, management, what they're highlighting of VST Industries is that the cigarette industry has seen a mid-single-digit volume growth during the quarter, that is Q1. Sequentially, volumes are seeing an improvement coming in. That means VST's market loss is for ITC in key market for Telangana. So sequentially, volume improvement for VST means that ITC may have lost market share there. That is one of the read-through that comes in for ITC. Other than that, VST also highlighted that they're making efforts to improve their volume growth for the balance FY24, and margin contraction is owing to the inflation in the tobacco prices. So these are the key highlights that are there, and that is what we could expect from ITC's cigarette business as well.
So much for that, Vinny. Let's quickly move on. Uday Kotak, Asia's richest banker who single-handedly built one of the country's most valued lenders, bearing his family name, will likely take a non-executive role soon at Kotak Mahindra Bank. In a letter to shareholders, he said the alignment of stock owners, board as well as the management will help navigate the bank through this unprecedented transformation that's already put New Delhi at the top of the list of major economies driving growth through financial inclusion. He says going forward, he sees his role as a non-executive board governance member and strategic shareholder with a long-term perspective of nurturing a world-class institution. It is unusual, he says, in today's world of banking anywhere to have an individual with nearly 26% skin in the game with disproportionate family assets in one stock, emotionally attached to living his dream of making India proud.
All right, then with that, it's time for us to slip into a short break. You don't go anywhere. After the break, we get you all the stock-specific action. Welcome back. You're watching Market Cafe, and it is that time of the show where we get you all the stock-specific news and all the stocks that you need to watch out for in today's trading session. And for that, we have Ashesha in the studio with us. Ashesha, tell us what are the stocks that we need to keep on our radar? What are the stocks that will be moving the markets today?
Well, yes, good morning. Let's first up start off with Angel One, and this is because the company has been prohibited from taking additional authorized persons or APs for a period of 6 months. The existing APs will also face scrutiny with respect to their operations, and APs contributed about 23% of the company's broking income in FY23. So an important update has come in with respect to Angel Broking, on account of which this counter will be in focus today. Moving on to Patanjali then, this counter was in focus over the last 2 trading sessions. Today also it will continue to be in focus on the back of their fundraising plans. In fact, it is an OFS where the promoters were looking to sell stake, about 7% stake. OFS was subscribed 2.1 times on the final day. The retail portion was subscribed about 3 times, and some block deals also happened on Friday where Fidelity Securities bought about 1,95,000 shares. Power Grid, meanwhile, on the back of their investment plans, where the board of directors have informed the exchanges and they have approved investment plan to the tune of 4,000 crores for advanced meters. Aarti Drugs, meanwhile, will be considering a buyback in the meeting that is scheduled to happen on the 21st of July. Happiest Minds, remember the QIP, the news was in a focus over the last week as well, and now board of directors have raised about 500 crores via QIP. Tro Capital, Society Generale, BNP Paribas, BofA, Morgan Stanley are some of the prominent investors who have invested in this particular company via QIP. So on account of this news that has come in, Happiest Minds will also be in focus today. Also keep an eye out on Tata Motors, and this is on the back of price hike that the company has undertaken. They have undertaken price hike to the tune of 0.6% across models. This is across passenger vehicle category. Lastly, Indigo will be in focus, and that is because promoter lock-in has now ended. They could probably sell shares in the open markets. On account of this, Interglobe Aviation will also be in focus today.
Right, thanks so much, Ashesha, for all of those. And you also see some of China's economic data flashing at the bottom of your screens. Let's also quickly go to Vamakshi, who's standing by, looking at all the brokerage notes that are in focus. Vamakshi, talk to us about some of those notes.
Well, yes, let me first start off with Federal Bank. We have a note coming in from Citi, and Citi has actually opened a 90-day catalyst watch on this counter, given expectations of NIMs bottoming out sooner than expected. A quicker term deposit repricing, scaling up of the high-yielding products, as well as proposed equity infusion are seen supporting NIMs in the coming quarters. In fact, they're expecting the company to outpace a system-wide credit growth by around 4 to 7%, and the valuations for this counter, given all those positive factors, look quite inexpensive, which is why Citi has given a buy rating, target price of 160 per share. Other than that, we have Bandhan Bank in focus on the back of its numbers. We did have brokerage houses like CLSA and Nomura maintaining their buy rating, but both these brokerage houses have in fact gone ahead and cut their target price. Largely, brokerages have highlighted that it was a very tough quarter for Bandhan Bank, but a gradual recovery is expected ahead. There was a large increase in the MFI NPS, and this was mainly driven by a regulatory reclassification. Other than that, they also believe that a pickup in growth outlook is quite essential for re-rating. So on the back of that, keep an eye out on Bandhan Bank. And lastly, watch out for another big bank, that is HDFC Bank. We have a note coming in from Jefferies, and Jefferies has highlighted that this bank is among the fastest growing and highest return on equity in the $100 billion market cap club. Asset growth could be led by housing, CRB, as well as consumption retail. Deposit mobilization is very important, and the franchise is in fact delivering on that front as well. They're expecting 17% CAGR in profit and ROA of 1.9% and an ROE of 16%. So given all these positive factors, Jefferies has resumed coverage on HDFC Bank with a buy rating, target price of 2,100 per share.
All right, Vamakshi, thank you so much for those updates. We'll move on then. With markets nearing record highs, are there sectors that are overrated or underrated? Now, market veterans break it down for us. Let's go across and listen in.
Well, I think underrated, as I said, that pharma healthcare space is already there, maybe IT getting to that space. What is looking overvalued to my mind, I'm quite concerned about some of the names that I see in capital goods. The valuations are completely off the charts. Now, I know that Indian companies are well placed to step on capex, but when valuations are very, very rich, they've already incorporated that upside into their numbers. And therefore, anything which could then cause us to reevaluate potential growth over the next few years could come as a setback to those sky high valuations. So there's one area where I'm a little bit muted in terms of what the valuations are telling me. It would sort of be in that capital goods area.
Our sense is that look out for stocks which have margin of safety, where valuations are in your favor, businesses are solid over a medium to long term, and management, you are not compromising on the management teams which have a depth of seeing multiple cycles over a period of time. And that's how our bottom-up approach is moving. And we believe that incrementally, pharma, banking and financial services, IT to a certain extent, and maybe auto and auto anchs are the sector where we are positive.
The assumption that the market has and whatever the valuation of pricing in that, whatever happened in the last 10 years will repeat in the next 10 years. That is, you will see high growth at high profitability for an extended period of time. I think that argument seriously needs to be challenged. And I suppose the volume growth will be there. But whether high profitability will sustain or not, I seriously doubt it. Given the change in market structure, the level of disruption you're seeing across sectors, I would be very surprised if profitability holds up in the Indian context, which means you will see a fairly sharp correction in multiples as and when they happen. Auto is clearly most overrated. Underrated, I don't know. It's not as if if you can find value in most of the markets. Maybe financials, I would say. But having said that, it's a high level sector. At this point in time, valuations are quite reasonable in the context of where they have traded historically. In most cases, multiples are actually lower than the pre-COVID levels, but the fundamentals are far better of most of the banks and NBFCs. So that's one sector where at least there is some value based on fundamentals.
Right, those were of course the market veterans talking about their views, what they're overweight and underweight on. But with that, we're completely out of time on this edition of Market Cafe. You have the Gift Nifty absolutely flat, slight positive bias. But for now, from Ankita, myself, as well as everyone who puts the show together, thanks so much for watching. The market will take the action forward.